So we had another busy week in the markets. I wanted to talk about that, but the main thing coming out of this week was the Jackson Hole meeting, the central banker meeting, and Jerome Powell spoke there. And the main takeaway was that he said they're prepared to raise rates further. Now, initially the market was down on that news, and the market ended up closing up, which I'll get into after I talk a little bit about this. So again, his exact comment was. The message is the same. It is the Fed's job to bring inflation down to our 2% goal, and we will do so. So nobody knows what's going to happen. There is 2 more meetings before the end of the year, and if I was betting, even though the markets are predicting it's not going to happen, I feel like we're going to get another hike, right? Again, could just be my opinion, or sorry, I could be wrong about that, but that's my opinion. I feel like we're going to get one or two more hikes. And I think that we'll probably get a lowering at some point in 2024. They'll probably pause for a little bit. Now, the one thing people need to keep in mind is the higher they go, the more likely they are to break something, right? And that's the thing that really concerns me, is that in reality, there isn't really a need for higher rates, right? I don't believe that. The problem is, again, like I said, the higher they go, the more likely they are. I mean, look at every time that they've raised rates over the last 3 decades, they've had to reverse course within a couple years, right? So that's something to keep in mind, that the chances of rates being where they're at now, a year or 2 from now, is very low, right? And again, that's exactly what the yield curve is predicting, right? The yield curves are inverted. And what does that mean? That means that the bond market is betting that rates are going to be going down, right? So that's something that will certainly come at some point, right? I mean, if we project out, let's say 2 or 3 years, the chances of rates being as high as they are now is very low. Now, on the flip side, I think that it's very well possible that the days of 0% rates probably could be over, at least in the near term, right? If anything, they probably lower them down to, I don't know, I mean, what did they get them down to? 1%, 2%? That's probably the more maybe even 3%, the more likely place that they end up, right? Unless we have like a major, 08 style crisis, they probably don't lower them down as much as they did in the past, right? So if we look at the market here, the S&P, again, like I said, was actually up a little bit on the week, right? It was actually up a little bit on the week, which is good to see. Although it briefly hit the 50-day and then it went right back down again. So as of right now, it's looking like the 50-day might be the top, right? But again, we're still well above the 200-day, the 150, the 100. I think that, again, we probably see a little bit of a correction over the next month or 2, and then we go higher by the end of the year. Will we make new yearly highs? No one knows. I think probably not, right? I think that the 4,500, 4,600 on the S&P probably is the yearly high. And then I think we very well could see new all-time highs at some point in 2024, right? That's my prediction. If we look at the QQQs, or the NASDAQ, similar story. The NASDAQ actually ended up going up about 2% on the week. It actually briefly went above the 50-day. Again, it's back below. Again, the NASDAQ's in even more clear of an uptrend. But again, the one thing you need to keep in mind too is that the NASDAQ usually corrects harder on the way down, right? So that's something to keep in mind as well. So as far as earnings go, speaking of the NASDAQ, the big one coming out of last week was NVIDIA. They easily beat earnings in revenue, and initially the stock was way up. But it actually came right back down, right? It did close up a little bit on the week, I think slightly up. But again, like I've said a million times, and I think people know this, is NVIDIA, good company, right? Very good company. But again, just egregious valuations, right? A PE of 237, a price of free cash flow of 222. Like, that's just absolutely egregious, right? That is way too high, like way too high. Like, this company traditionally is crazy expensive, and it's still way above where it traditionally trades. So I wouldn't even think about getting back into it until it was even below where the 5-year average is here, and that's not going to happen anytime soon. So again, like I say, solid company, but again, just way too expensive right now. Next company here was Lowe's. They beat earnings, but they missed revenue. I don't have a position in this company. I don't have a position in NVIDIA either. I think it's a half decent company. I think Home Depot's a little bit better. But again, it's still a good gauge on the consumer and whatnot as well. Again, another one here, Advance Auto Parts. They missed earnings. This is another company. It's good to see how they're doing. I don't necessarily love it as a company because it's just not that great, but that is a little bit concerning there. And another example of that is Dollar Tree, obviously a dollar store. They beat revenue and earnings, although the CFO came out and sounded the alarm that we're a little concerned about how the economy was doing. And as you can see, again, the company was down 13% on the week. So that's something that I think is a little bit concerning there, that several of these kinds of people have came out and talked about this. And I'll get into the next one here. Affirm, this is another company, again, don't have a position, but I think is an very interesting company that I think should be watched. Again, they beat earnings and revenue, although I don't even know if they're even profitable yet. Let's take a look here and see. No, they are not, right? So again, interesting company to watch, but again, they're not even profitable yet, so that's something to keep an eye on. They were up a lot on the week. Wow, that was a good week for them. Let's see what they did here. About 21%. So congrats if you bought Affirm to start the week. Next one here, Royal Bank. They and TD both released earnings this week. Royal Bank beat earnings, although, again, they also warned of a slowing economy, right? So, again, that's kind of a trend that we've noticed recently. TD missed earnings. They were down pretty nice on the week. So, again, I think they're the two biggest banks in Canada. Both a little bit concerning there. Definitely a little bit concerning. Canada, again, a little bit different scenario than the States, but I think that definitely is a little concerning and should keep an eye on this stuff. The last one here, this is actually the only one of these companies that I do have a position in. This company I did start dollar cost averaging recently. I really like this company. They're a semiconductor manufacturer. They actually missed earnings, although they actually closed up on the week, which is kind of surprising. But nonetheless, they do have a pretty solid exposure to the industrial side too, which I think is good because it gives you some diversification within that, tech sector, semiconductor sector. There's a lot of reasons I like this company. Again, very good company in my opinion. Again, let's just go into it briefly here. If we look at the growth, again, they're growing very, very nicely. Financial health is solid. Again, I did talk about this company recently as well. Management is good. The profitability is crazy good. Again, 35% operating margin, 30% free cash flow margin. Just very, very good numbers there. Valuation, again, it's not that crazy expensive. Again, 22 price of free cash flow, 24 PE. Those are both below their 5-year averages. Again, if you can get these higher growth companies at solid valuations, I don't know why people like sleeping on a lot of these kinds of companies for whatever reason, right? In fact, I'd much rather own this company right now than NVIDIA. Another reason is the dividend, right? Almost 2%, and they're growing at 12% a year, right? Almost 12% a year they're growing this. Again, you go back 10 years, this is almost an 8% yield you would have if you held this company, right? Again, easily outperforming the S&P, right? That's exactly what you want to see, in my opinion, right? Exactly what you want to see. So again, a very overlooked company within the tech sector and the semiconductor industry, in my opinion. I really like this company, which is why, like I said, I've started to dollar cost average into this company. So again, that is this week. I think, like I say, the main thing coming out of this week was the Jackson Hole symposium. Again, the market kind of looks like they kind of shook off what Powell had to say, because I think everybody knows that, yeah, they might very well raise rates 1 or 2 more times, but it's only a matter of time until they stop, and not only that, until they cut again, right? So, and again, even if inflation's high, that's not necessarily bad for stocks, right? That's not necessarily bad for stocks. So that's another thing to keep in mind. So anyway, that's what I wanted to bring up today. If you liked the video, hit that like and subscribe and stay tuned for more.